Hello, welcome to Coin Times with Maria Matic. I have a pleasure to host Mr. John Lilich. Hi, John.
Hello, hello.
Welcome. John is a member of Consensus, which is building Ethereum's ecosystem. He's also founder of Code to Inspire. Code to Inspire is a non-profit organization which is building schools for programming for Afghanistan girls. So, welcome, John, and
Thank you.
thank you for coming here.
I am also a fellow Serb.
You're a fellow Serb, yeah, and that's why I have a pleasure to host you here. And I hope you're having a good time in Serbia.
Very good, very good. Yeah, a little bit cold.
A little bit cold, so yeah, we're gonna warm it up now. The atmosphere. So yesterday we had a very nice chat about everything happening with Ethereum, and we spoke about decentralized applications, and that's the question which always kind of comes back, like when the killer dApp. And you had an interesting answer.
Yeah, well, I think so. Yesterday there was a very excellent meetup here in Belgrade, and first of all, I think it's fantastic that crypto ecosystems are starting to build and starting to grow in Serbia and across the Balkans. It's fantastic to see Bitcoin and crypto and Ethereum and other blockchain meetups happening here. So that was super cool. Yeah, we talked a lot about this notion of killer dApps, or what is sort of some of the Ethereum killer dApps, and I guess there's maybe sort of lack of information, or rather lack of dissemination of information as to the current state of the Ethereum ecosystem. There's quite a few projects that are doing very interesting things. Some of them in a public context, and others in a private permission context. So there's a spectrum. I think on the public side, we talked a lot about the Maker DAO project and the DAI stablecoin. We talked a lot about, well, of course, yesterday it was a big topic of discussion was the recent market activity, which is to say the hemorrhaging of the markets. I think personally, I've been very fortunate to live in this ecosystem probably 8 years now, and I've experienced 90% drops a couple times in the past, and it's certainly kind of a radical departure from what most people expect when they invest their money or when they participate in an ecosystem, that you won't sort of see that kind of precipitous decline in a very short period of time. However, we are dealing with highly volatile, nascent technologies that sort of have these tokens that kind of are abstraction layers representing various forms of value, and a lot of that behavior is sort of still unpredictable and not really well known. But as the ecosystem matures, we are really seeing quite a lot of interesting innovation to try and bring less volatility and more stability into the market. Obviously, we've seen things like Tether and attempts at stable coins, but the problem with that is you don't have this disambiguation. You don't have a clean cut. You have to sort of trust that, I don't know, Bitfinex is not misleading you about how much money they have in their bank account when they do something like issue Tether.
So you basically say that in the case of MakerDAO, you have this transparency where you can see how the things are working, and you also mentioned how important it is for future price of Ethereum, maybe, I mean, to the speculators, that there will be built and the building of these financial instruments which will have Ethereum as a collateral. So, and you mentioned a very large sum of Ethereum being locked in MakerDAO. Like,
Sure.
How much?
Well, so this goes back to this notion of the killer app or killer whatever dApp. The fact that you can create a mechanism, a financial instrument like the DAI, okay, which sort of has this mechanism, this collateral mechanism underneath that has been performing extremely well in maintaining price stability even during this massive drop.
Yes.
Well, the fact that that can happen in a transparent, open financial infrastructure, okay, that is the killer app. That is the ability to create such products and services and deploy them globally and have them sort of operate in that kind of a construct is very, very unique. And sort of to your point, from a speculator's perspective, there's good and bad to speculation. I'm not here to say speculation is bad. That being said, there's certainly demand for stability. That stability now can sort of exist in this decentralized, transparent, permissionless context.
I think the great advantage of MakerDAO is that you have both. You have stability to coin system. So you have MakerDAO, which is a utility token used for governance, and then you have, by burning it and by having to buy from the exchange in order to close the collateralized debt position, you're basically, should in some, when the market is more liquid and everything, should maybe rise the price up. So anyway, for speculators, you have MakerDAO, and for people who really need a stablecoin, you have DAI.
That's right.
And it's all on the cryptocurrency. You're not dependent of the paper money like Tether and Gemini dollars are.
That's right. You're sort of relying on the underlying mechanisms underneath, things like collateral, things like paying debt, etc. And that is happening in this transparent framework. And so from that, you can sort of have very strong assurances as to what exactly you're engaging with when it comes to that kind of a mechanism. So the fact that that exists is a killer app. That's an incredible killer app.
The fact that it works, actually.
That's right.
Yeah, and it's working and still working like for 1 year, I think now. And that's cool.
That's right. Now, what else is interesting and what we're seeing is across the ecosystem, lots of rich collaboration, open communication, and now interoperability, not just in terms of software functionality or feature set functionality, but assuming risk and sharing risk. And so to your point, the Aragon project recently they announced that they put a boatload of Ether, I can't remember the exact amount, but it was I think several 100,000 into the DAI. And so as a way of hedging their risk, as a way of finding stability during this kind of market volatility, but without exiting the ecosystem.
Yeah.
Okay.
But that money, that Tether, is actually locked, so it's taken away from the supply. Yeah. Well, reducing the supply. Yes.
Yeah. So that's
good. It's good for the price.
Well, it's an interesting point. I mean, from a speculative price perspective, yes, you as something like this product continues to grow and garner attention, it is very possible that more and more Ether will sort of be locked, so to speak, in this type of form, which does constrict supply and could potentially impact price in an upward direction. It's just like, again, we also talked last night, trying to understand from a price perspective what the future of Ethereum looks like when you consider the scalability initiatives that are happening and the outcomes of those initiatives. And so specifically, you're looking at, well, inflation will be significantly reduced in the future, which is sort of one side of it. And the other side is a very large percentage, perhaps 30%, maybe more. I mean, it's difficult to speculate, but a big chunk of the supply will get locked in staking contracts as well. And so
sorry, can you tell me a bit more about total supply of Ethereum and how, I mean, Ethereum doesn't have a total supply, but you say that in the future we will have like all those initiatives to reduce supply, okay, with these projects, but I didn't get how it's going to be, like what is going to be the total supply of Ethereum, or it's not going to have, or it's not going to be kept.
Well, I think it's unclear what the total supply will end up being, but what does seem clear at this stage is the issuance of new ether will significantly reduce.
Are you talking about like Constantinople, which will reduce reward for block, like from 3 to 2 Ethereum?
Exactly.
Or you're talking...
Exactly. So block reward reduction will happen.
Reduction, okay.
That is sort of one side of it, and so as the block reward reduction takes place, there's obviously less supply that is created going forward, and that's sort of one.
Yeah, that's good for investors.
Well, I mean, I don't.
I
don't want to speculate if it's good or bad, just because. Well, as an investor,
I know, but I speculate a lot. I like to speculate, and I always kind of approach things from the investor point of view, because there are so many people investing in cryptocurrencies. So just want to get, from that perspective,
Sure. So if you're looking for trends that fundamental trends at the protocol level, I would say that could be likely a driver upward pressure in price, then looking at inflation or issuance of new supply, and the reduction of that is certainly very positive if you're thinking about the price going up. Likewise, if you think about in a proof of stake world, lots and lots of ether being locked in staking contracts, then that also means there's a constriction. Right, a limited sort of circulating supply, and
also no selling pressure from the miners.
Well, potentially, and then on top of that, when you start to see the kind of innovation like with MakerDAO and other groups that have a bunch of ether, like Aragon, sort of locking more ether into a product like the DAI. So you start to see this interesting interoperability, which also sort of locks or rather constricts circulating supply.
I get the notion, like, I kind of think that the top coins will have this comparative advantage of being locked in certain as certain collaterals or something as a basket. Maybe at the moment there are a couple of projects where they take those stock coins and just lock them somewhere or use them as collateral. So I think it's going to be a good advantage if you're in the top coins one day, when that market kind of grows.
Well, I mean, I would even go so far as to say, I know from personal experience, if you look at the OTC markets, the over-the-counter markets, there is sort of all sorts of post-settlement trade activity happening with a small number of tokens, of coins that are sort of used as collateral. And so you can already, I mean, this is of course relationship dependent. OTC markets are very different, but the size of the OTC markets is also, I think, poorly understood because they're actually much bigger than people realize, I would say, as a percentage of
Do you think the
trade.
OTC market is much larger than the exchange market right now in the crypto?
Yeah, I mean, I do think so. I think that we've seen lots and lots of sort of large trades between counterparties, sort of done based on history, relationship, sort of direct trading in an OTC context, without having to use the exchange as an intermediary. I mean, there's tons of that happening, particularly if you look at especially if you look at Japan as an example. I think it's very clear. I mean, somehow we Western people are very, I don't think we understand the scope and the size of the market activity in Asia, which is, by the way, where I live. I spend most of my time there. It's sort of like if you look at the ranking, and I have a lot of good friends at Coinbase. I love those very nice people and stuff like that. But if you look at GDAX, Coinbase, very, very small relative to like Bitflyer or some of the Korean exchanges. I mean, the volume is over there. Bitflyer's the biggest exchange in the world. So
according to adjusted volume, or
I think you can go on you can go on like CoinHills or some of these. They rank the according to volume, trading volume, and so the amount of OTC activity in Japan, I think, is non-trivial. Last year, Bitcoin was like Bitcoin trading was like 0.3% of Japan's GDP. So it's significantly.
It's
it's significantly more than. And then you sort of look at the activity that's happening in the macroeconomic context in Japan. There's tons of quantitative easing. There's a very large bubble, fiat bubble, that's likely going to pop soon. So those kinds of traders are very sophisticated, and you have lots and lots of, I would say, pretty large OTC networks between Japan, between Korea, between Hong Kong, between Singapore.
So what are the most important projects happening there?
Well, so in the region, there's a bunch of different things happening. I would say that if we go back to Japan for a second, you're starting to see real institutional actors like doing things, like SoftBank Investment launching an exchange. You know, SBI is maybe poorly understood in the West, but
SBI Group.
Yeah, it's probably the most significant.
It's very strong. Yeah.
Oh my God, a very, very, very large group. So you're starting to see that kind of activity. I spend a lot of time in the Philippines on the institutional side of it. We and our partners there have rolled out a rural banking project called I2I, which is connecting like 70 million people. I don't know that the scale of that is necessarily well understood outside of that little bubble.
There's like more people than the UK has.
Yeah, that's like 10 times more. You know, Serbia has like 7 million people, so it's like 10 times more. There's a lot of people.
Yeah.
The scale of the region is I don't think you look at, again, the Philippines, 110 million people. Right next to it, Indonesia has like 370 million people, 400 million people. I mean, just lots and lots, and very young, growing.
And those are tigers. Like, it's not like completely. You know, that's a very interesting region.
Well, we're seeing like 7% real GDP growth for the next 20 years in places like Vietnam and the Philippines and Indonesia, etc. So it's a different market dynamic. And then you look at, for example, coins.ph. Those guys are very good friends of ours. They are kind of like a Coinbase solutions provider for the Philippines, and now extending out throughout Southeast Asia. I mean, they're an independent company, but they do something similar. They've got like 7 million customers, and a lot of people don't know that. So
the market is quite big,
yeah,
and there are so many opportunities.
Yeah, absolutely, and I think it's just poorly understood by many of us sort of Western crypto enthusiasts. We tend to get wrapped up in our own worldview, but sort of negate the extent of what's happening there. And then from a technology perspective, if you go to like Vietnam, for example, a lot of people don't realize that Vietnam is a very strong technology hub, tremendous software engineers, lots and lots of developers, lots of IT people. So huge swaths of that community is providing outsourcing services to many crypto projects. And meanwhile, they're developing capability and sort of experience, etc. And so you look at that nation and the activity that's happening there. I think the transition into the Web3 blockchain ecosystem is spectacular, and it's tech driven. Likewise, at Consensus, one of our sort of key geographies where we operate is Romania, where we have tremendous developer talent. Of course, that's in Europe, but it's sort of Eastern Europe, and it gets dismissed or forgotten.
Yeah, that's what I wanted to ask you. Like Consensus, what kind of support does it offer? Like, does it have anything? Are you having anything in Balkan region, or you just said Romania?
Well, so Consensus is now sort of. It's hard to rationalize how it's growing because it's gotten a lot bigger than I expected anyway at this time, and so there's probably 13.
How big it is?
Well, there's 13 or 1,400 people and I think we're in like 20 different countries or 25 different countries.
That's impressive.
So, well, I mean,
in like what, in a year, or how long does it exist?
well, this is our fourth year. We're going on our
year.
fourth
Okay.
year, yeah. And so, specifically with respect to the Balkans, I'm very bullish on this region because there's great people, great technical talent. There is sort of capital market infrastructure and banking infrastructure that's maybe not so, I don't know if developed is the right word, or burdened by the infrastructure that we have in the West. And so I think these markets can transition very quickly, whether it's away from big banks and towards mobile banking and individual sovereignty over your banking very, very quickly. But also the technical talent is spectacular. And so we do have, and people can look this up, you'd be surprised, Romania, they talk about it as like the Silicon Valley of Eastern Europe. There's just so much, and these people are wonderful. They're Slavic people, so they have this kind of like work ethic and sort of technical prowess, but then they speak a Latin language, so they're very sensible. And then beyond Romania, of course, you get into Bulgaria, very similar to Serbia, lots of bright young people. And when you think about it, it's like, if you're a young person and now you have the opportunity to learn some technical skills, and maybe you can work as a developer, and maybe you can work remotely and meaningfully collaborate with others around the world, well, lots of people would choose to just stay in a place like Belgrade. You can earn $40,000, $50,000, $60,000, $70,000 a year. And that is like a very different economic reality, lots of purchasing power. You can sort of live very well. Versus imagine making like $80,000 or $90,000 or $100,000 and trying to live in London. You know, you're probably living in a crappy closet.
Exactly.
And so I think that's one of the really interesting dynamics we're seeing in these emerging markets, especially in the Balkans, is the blockchain coordinates activity very well, and so you have meaningful collaboration. And
also raising of capital, like Ethereum has changed, venture capital, and has decentralized it and made it available even for the countries which are quite closed and they don't have an easy access to the capital. So yeah, Ethereum has changed that.
Well, we had a discussion last night at the meetup talking about ICOs and
what do you think are going to be the new trends in ICOs? Well,
I think first it's important to recognize, yes, there are just an enormous amount of I don't know if I can say shitcoins on YouTube or not.
Yes, of course.
Okay, great. So yes, that is very true. However, I think it's much more useful to contextualize it and sort of contrast to traditional venture capital. Okay, investing in tech is ugly. It fails most of the time. Silicon Valley has a long history of very bad behavior, extremely poor capital allocation, just lots and lots of stories that maybe don't get out into the public or take many, many years before the public realizes what's going on, because these are private deals. Deal flow, access to deal flow has historically been restricted to a privileged small number of venture capital groups. And so finally, Ethereum sort of enables this retail access, if you will, where anyone can kind of participate. But that happens in a much, much more transparent public context. So the ugliness of what is going on is sort of exposed and everyone can see it. And
so it's basically less regulated but more exposed.
Well, I don't know if less regulated. So it is more exposed because it's happening in a much more public context, for sure. Less regulated. I mean, if you look at the SEC in the United States and in many other jurisdictions, there are sort of like clear rules. Now, if you choose to use a financial instrument create a financial instrument without registering it properly with the SEC, and you do that in a crypto token context, or if you, I don't know, write a piece of paper and send it in the mail and do it in an old-fashioned context, you're still sort of violating the same set of rules. So I think there's lots and lots of groups that have rush to get to the market quickly and take advantage of the initial euphoria. And there's consequences for that. There you should expect there to be, because that's how the regulatory regimes work. Now, there is definitely a need for clarity around certain new types of feature sets, capabilities, and potentially outcomes from crypto tokens. And I think that's happening, largely speaking. But you can't you can't break SEC rules any way you look at it, right? Like, there's consequences for that, and lots of groups are sort of finding out. In fact, it was funny today. I saw on Twitter there was a bunch of really great memes because DJ Khaled.
Yeah, wow.
He has to pay a fine.
What was that?
Well, he was promoting some. Yeah, I think whatever shitcoin he was promoting, him and.
So yeah, it's quite interesting. I mean, Floyd Mayweather and DJ Khaled, I think they are the first individuals which are being charged for promoting some scam coins. Like, we've seen CEOs of or founders of the companies which are building some scam coins being punished by the SEC, but this is the first time that individuals which are promoting it, as far as I know, are getting. So, do you think this is going to create a certain panic or the change in the behavior of some people? You know?
Well, yeah, I mean, you cannot be a celebrity and engage in activity that is sort of like outside of the bounds of what the SEC sort of describes. When you're promoting financial products, structured finance products, like
but this is only important for American celebrities, yeah? Because I mean, SEC does not have a jurisdiction of I don't know, other nations. So
well, that's not necessarily true. If there's American investors involved, then the SEC can definitely have. They were sort of like engaging in poor behavior, and now they're being fined for it. I don't think that's going to cause a panic. I think that's sort of an expected outcome. They should have smarter lawyers or business managers that don't encourage them to do stupid things.
What are those ICOs which did an ICO before the regulation came? What are they going to do? Are they in kind of problem, the ones which created those securities, kind of, unregistered securities? So
absolutely.
Utility borderline security token.
No, I mean, I think there's very clear guidelines in existing.
What can they do now? Like, are they going to get punished for what they did when the regulations didn't even exist? Or
well, that's not an accurate characterization. Every single ICO that has ever happened, at the time there was regulation that described securities laws. Okay, now whether some ICOs followed the regulation and did not commit securities violations, many of them did, and many of them legitimately created utility tokens and sort of like have very compelling legal opinions and arguments that exclude them from the jurisdiction of the SEC and potential fines. That, I think, is clear. There are many others that just disregarded, maybe they didn't have good lawyers, they didn't invest in good lawyers, they didn't take the time to do, and those groups, yeah, absolutely. They could be under the jurisdiction of the SEC, and they could be fined. I'm not
talking about the creators of scam coins. I'm talking about the genuine projects we just didn't really, before the real talk about regulation came in.
Well, ignorance of the law is not a defense, right? So if you create, and you're a genuine project or whatever, and you created a sale and you raised a lot of money and you did it outside the confines of the securities laws, you can expect to have some consequences. Yeah, I mean, that's whether or not crypto people at the time understood securities laws like we do today doesn't change the fact that the laws were sort of in existence at that time. Yeah, so
sorry, can you tell me, do you have any info, like how many projects, I'm not talking about the ICOs, I'm talking about other projects, are currently being built on Ethereum? Do you have any kind of number?
Oh, I don't know. I mean, I think it's in the hundreds, possibly in the thousands. There's many. I can tell you some things concretely. For example, at Consensus, we built a integrated developer environment and toolkit called Truffle. and Truffle has more than 1 million downloads. So does Ganache, which is sort of a complementary piece. And so that is sort of like, I think, a relevant metric that...
Sorry, Truffle is used for programming? No?
Yeah, it's an integrated developer environment and toolkit.
Uh-huh.
So it makes it easy for software developers, easier to build smart contracts and do many different things. And so it's a tremendous supporting element for the ecosystem focused on developers.
Mm-hmm.
And so when you have that kind of a product with 1 million plus downloads, that means you have lots and lots of software developers playing around and using the technology. So I think that's a relevant metric. Another relevant metric is you can look at other supporting infrastructure components like MetaMask. MetaMask is an in-browser wallet that allows you to sign transactions. It sort of brings the Web3 experience into the browser. MetaMask also has, like, I don't know, 1.2 million downloads or something like that. Mm-hmm. So that's a metric that shows people are using this tool, and this tool is sort of really, really important for making the Web3 experience accessible. And so that's another, I think, useful metric. You can also look at something like Infura, which is a database infrastructure. It's an infrastructure solution that is serving up 8 to 10 billion data read requests per day. I mean, these are sort of like, now, to what extent some of that is spam or whatever, certainly that's a conversation people can have, but the point is it's sort of heavily being used, which is another indicator of adoption. So those are the kinds of things I would definitely be looking at. Now, the other thing that's a little bit unfortunate is my role at Consensus is I do a lot of enterprise, institutional type work with large corporates or governments, and basically all of it is under NDA, so I'm not at liberty to talk about many of those things. A bunch of stuff is public, and there's always lots of headlines and big companies doing things, but a lot of the stuff that we cannot talk about, and it's been like that for years, just like tremendous activity, and a lot of these large organizations are building in a private permission context.
Yeah.
But
there is a large interest from the governments to work.
We're
pilots on a blockchain.
More than pilots, production systems. Yeah, production systems. We've been working with the Dubai government for a couple of years now. This is all public, so I can tell you. But it's like their entire government infrastructure is being rebuilt on the blockchain, like many critical elements.
Are you allowed to say like how it's going?
Yeah, it's going really well. I mean, there's many different announcements that have been made publicly. I think that...
How many people are working on their... So they're planning to build e-government. I remember judicial system, passportless travels, land registry.
Yep.
What else?
Oh, lots of different things. So transportation is another one. If you can imagine, Dubai is already... You don't have to believe me. You can YouTube this. There's flying drone taxis in Dubai already. I mean, passenger drones. There's self-driving Tesla taxis. So they're imagining an autonomous vehicle future, an autonomous transportation infrastructure. And so things like the vehicle having its own identity on the blockchain, being able to sort of like service itself, pay for itself, register itself, really sort of function as an autonomous agent. So those kinds of things, there's a really cool...
so they're planning to use permission for IoT as well?
Yeah, so...
Private permission.
So that project specifically, there's a really cool, if people want to YouTube it, it's called Project Oaken, and it's called Tesla on the Blockchain, put a Tesla on the blockchain. Really great video. Those guys are super cool. They're not a Consensus team, but they're an Ethereum project, and you'll see what I mean. So a lot of work is happening now in a private permission context, yes. However, I would say probably the vast majority of those projects have a roadmap towards transitioning onto the public network as and when that becomes appropriate.
To become more decentralized or?
More decentralized, more accessible, more secure.
More secure.
There's lots of different reasons, yeah.
Okay. Well, that's interesting to hear.
Yeah, well,
And like, I mean, we are obviously very early in the technology sense and the ripeness of the market, but like, you know, scalability issue with Ethereum. How many projects are there apart from, is it going to come from the sharding? Are we going to have to wait for, I don't know, 2 years, 3 years? Or you think it's going to come sooner with other kind of projects? So if we're going to have, you know, so many maybe private permissioned government projects, and there's going to be so many transactions, and if they connect to the public one, I guess they're gonna, you know, how it's gonna work.
well, so first, scalability is hard. There's many hard problems, and fortunately, across the Ethereum ecosystem, there's a lot of different people working on different approaches, and so I think there's sort of parallel processing, if you will. Excuse me. So everyone, I'm sure, most people are familiar with the Casper project, and that has sort of two key elements: sharding and proof of stake. But then there's other initiatives as well. You look at some of the stuff Gavin's doing with Polkadot and this worldview he has in terms of parachains, which I think is really interesting as well.
So you think Polkadot is not on Ethereum?
No, but these are like Ethereum derivative or Ethereum sister networks. Dfinity is also very similar. Dfinity is achieved.
So you think there is a future for those kind of Web3 projects such as Polkadot or
of course,
similar, which are like chain agnostic, and they have all these relays and bridges and stuff to connect different blockchains.
I have
it's like internet, like the third version of internet.
Yeah, exactly. I mean, I have a pluralist view of reality. I think that many different things working together is sort of. I mean, the ultimate outcome is for people to have systems that they can use with integrity and transparency and security. Okay, not that only one system that I have a bunch of coins and am interested in is going to be the only one that wins, right? So this maximalism thing is like kind of stupid. I think, and so from a technology perspective, if you're building software, if you are in the world of best practice software methodologies, you're sort of, I think, probably also thinking in pluralist terms because you're open to new possibilities and new things that people are doing. So scaling, I would say that is, it's useful to think about it as a broader Web3 problem, and there's a multitude of approaches, and many of them are really interesting, and lots of people are working on stuff, and I think that's super cool.
So you think it can come off-chain? The solution can come from the other sources. It doesn't have to be maybe the sharding.
Well, I think if we get sharding right, and it's very hard, it's a very hard problem. If you get it right, the sort of the scalability that you can achieve is quite significant. That being said, there's even today, I mean, one of the key attributes of building a successful blockchain application is knowing when to go off-chain, when to go on-chain. Going on-chain can be very expensive in many instances. So that kind of optimization, I think, is also part of the scaling solution. Absolutely, like people, solutions architects, software engineers. I mean, these people that work together with stakeholders when you flush out business requirements. These are the sorts of things that you definitely, you would definitely carefully evaluate for sure.
So John, thank you for coming. That was this was a very interesting conversation, and hope to see you soon.
Thank you for having me. Yeah.